Uh, it's a holiday week, as you go know. Most of you, last week was a holiday, bank holiday in London, and this week, tomorrow, the day after next Monday is a holiday week in is Labor Day in the United States. So we can expect that the markets are going to be really slow on Monday, but you can have a good decent action in the London session and in the Tokyo session, and you can get some nice moves. You can get some moves like this that you can take some money on, as long as you maintain or keep focus on Monday, that these moves are short term. You're not taking the moves. If you see a move like, I mean, on a normal trading day, you will get a nice continuous move. But on a day like Monday, since the number of players are not, all of them are not here, and all the US market is primarily closed, so the volume will be slightly thin, and that would force the currencies or force the pairs to move a little bit more extensive or a little bit more extended than normal, and these primarily are short-term moves. They're not. So go in, take your profit, and get out. Okay. Okay. So let's do our work. So if you look at, so there is some nice setups in the currency this week, and as usual, we start by looking at the dollar index, and we have, as you recall, we have a buying point or a structure point, which is the 74.40. And if you look at the weekly chart for the US dollar, it has been now holding this area, this 74.40 area now for the last 6 weeks. And then we have closed this week, even though with the very bad news that came out yesterday with about the unemployment, the labor data that came out yesterday. With that, we still have this positive close, and that is a very good indication for that there is buying coming in into the dollar, and that having a close above the 74.40 is quite positive, and we close at 74.83, and the close here, the high of, we're just about three ticks from the high, so it's it is more, this kind of close to me, it is more of that traders do not want to go into the weekend short the US dollar, because usually, as I said, because the volume is light, there is a holiday in the US market, so usually these are good times if there is an intervention to take place. That is usually a good time when a short term or a small intervention with a small amount of cash can actually push the dollar much further. And therefore, this kind of close to me is, first of all, it's two things. One, it is very positive. Two, that strong close, closing near the high of the day, is a more of an indication that might be more of a short covering. People do not want to stay or take the short positions for the dollar over the weekend, over the Labor Day weekend. Okay, but that is a very strong pattern, and that's what we trade, what we see. So we're looking at that. That is a very strong buy signal, or we have a good solid buy signal in the US dollar. If you look at the Australian, this is this was the big break that we had in the Aussie, and even though we have one down day and we have traded below the 106.34, which might indicate a short-term sell signal, but the move is still to the upside. This is within the acceptance zone, and we would have now closing at 106.19 based on the index would give us that if we trade back above the 106.54 based upon the index we have a short or a close buy signal. The Aussie, that move is very positive for the Australian. The Australian is one of the strong currencies, and that move is very positive. And this down day, a Friday down day, is a an indication that we are in an acceptance zone or we are in an so I'm not looking at this as too bearish, but we can if it stays below the 106.34 we can continue taking the short. So we can take a short, put our stop above the 34, so we have a narrow risk, a small stop on a short position, and of course we have a clear buy signal if it gets above the 106.34. That might, so the Aussie is reasonably strong. If you look at the Swiss franc, this is if more of a solid currency, a currency that is holding its own. They are trying to push that currency down, but with all the events that's happening in the world, it is still seen as a safe haven. It is still viewed as a place where people want to keep their money. That and in the gold and the precious metals. So this per se, again, this is, if you can see it, this is a weekly chart, and if you see here, this is very interesting. At the beginning of the week, we had a sell signal on the Swiss franc, and we would have expected capitulation to the downside. Then the Swiss came back, and we moved up. We had a buy signal. I mean, let me put the lines for you so you can see what I'm talking about. This was a sell signal which turned later on into a buy signal, and this was a buy signal that turned into a sell signal. So during this week you had actually a sell signal when it traded below the 122.59, but there was no follow through to the downside. It came back above the 122.59, which turned itself into a buy signal. It moved all the way up, traded above the 127.74, which initiated another stronger buy signal. You're going to see, I'm going to show it to you on the daily, and then it ended up giving us a sell signal. So you have basically a failed sell signal and a failed buy signal. Okay, I'm going to, if you see that on the weekly, you can see it here also on the daily chart. There is your failed buy signal when it traded above that, and it came all the way down to the 122.59. It gave you another major sell signal, which is also failed. So now you have a failed buy signal and a failed. So this kind of close is within the range of the week. It doesn't give us any directional bias. It is a neutral close. So we will be looking at the Swiss for with a neutral perspective. We are going to see the other currency. So if I'm going to be looking at this will be the last one or the least one I'm looking at selling, and it's not going to be the first one I'm going to look at buying. So we're going to be looking at the Swiss in a neutral stance. If you look at the yen, this here is, we have a close at 130.32. Our structural point is the 129.56. We have held above the 129.56 now for the last 1, 2, 3, 4, 5 or 6, 7 weeks, and we're holding above it, and we have again made one or and two attempts to break below the 129.56, looking for a further decline. This sell-off did not materialize, and we have closed the week at 130.32, which is about ballpark a full yen above the selling point. The low of the week was 129.44, so we did break that low, and then we turned around and we closed near the high, and our close for the week is above the structure points. So that is a strong indication that the yen wants to go higher, and we are not going to be looking. So the yen is quite positive. So I'm looking at the dollar as strong. I'm looking also at the yen as strong. I'm looking at the CAD, the Aussie, as reasonably strong, and the Swiss, I'm looking at it as neutral. If you look at the Canadian, we have here basically a sell signal below from here. That's our first sell signal, which we had several weeks ago, which turned down. It wasn't. This is not a structure failure. It is just a break below the structure point, and then we turned off, and we had 2 or 3 weeks to the upside, and this close that you see here, this close is a very bearish close because we have broken to the upside above 1, 2, 3 weekly highs. We went above this low of the 102.08, which could have been considered as a major buy signal, and then we failed and turned around and we had this close. This close is, as I said, a very weak close, and it's a major sell signal. So based on all the currencies that we looked at, the Canadian now is the weakest of those pairs. Now this comes the beauty of this week. This is this is where we should be focusing as ourselves on looking at. This is the euro, and if you recall, I've been telling you that this is setting up as what we call a diamond formation, and a diamond formation is one of the most bearish. It's not one of the, it is the most a diamond formation like this, having a peak, a low, and then it gives you this kind of, and you don't need to squint, you have to be able to see it clearly. Once you have this diamond formation and it breaks like what's happening today, that is a major sell signal, and then this will be, this level here is based on the index, which is the 138.27, what is the 138.11. Based on that, on the euro index, is going to be your structure point, and so that initially here will be your initial target. You're looking for a decline based on the index towards the 138.11 to test that. So you have about 300 pips based upon the index to test this low, and if it breaks this low, you're looking at major, you may be looking all the way back to the 129, if not the 119. This is one of the biggest trend changing patterns that you would ever see. Last but not least, if you're going to look at the British pound, it is more again in the neutral pattern. It has been still staying. I mean, if you look at this whole chart for the pound, we are still in a bear market. This is a big price acceptance zone, we haven't, it has been oscillating now in this range from, for the last 2 years. I mean, from 2009 it came down and moving back up. Every time it breaks through one of the structure, it fades back, it goes up. And right now we have the structure point is the 162.53, which is this high, and we closed at 106, 162.05. It is below the structure. We are, again, if we are going to look at it, I'm going to look at it as slightly bearish. I will look to taking a short, but in this case I'm going to be placing my stop and reversal above the 162.33. If we look at the US bonds, this is a real tell story about the US Treasury. The US Treasury now is in a major bull market. It is at an all-time high. The 140.11 is an all-time high. It's a historical high, and if that means anything, it means that everybody is going in and buying the US Treasury. Everybody is looking at the US Treasury now, which is the US IOUs, as a safe haven. This is actually, if you look at this chart, it is actually stronger than the chart of, or it's pretty much like the chart of gold. That's the chart of silver. So people are putting their money. Money is flowing in silver, money is flowing in gold, and money is flowing in the US Treasury. And if they're moving into US Treasury, and if they're buying the US Treasury, they only need, the only way they can buy it is by US dollars. So this means they are going to be selling whatever currencies they have, and they're going to be buying the US Treasury. And that is a good sign for the dollar base. The other thing which is slightly negative for the US dollar is the stock market, or the S&P. Again, we have broken the structure here, which is the 1251.46, which has put us in a bear market. And you can see that the selling is coming in into the S&P. The same kind of selling is coming into the Dow Jones. But this selling, which would indicate money going out or flowing out of the US dollar, is compensated or is outset by the amount of money that's going into the treasury. So based on that, if I look at gold, gold is again moving up. Like I showed you, it's now trading at 1876, pretty much near the all-time high, which again is a response to what's happening in the world. Everybody's scared, so gold is still the safe haven. They are putting in their money in, the money is going into gold, and it is going into a treasury. So if money is going into gold, we can expect that the Australian dollar to hold, and we should be expecting that the Canadian dollar also to hold, because these are the two commodity currencies. But if you look at the CAD, as I said to you, we have this is a major sell signal in the Canadian dollar. So I would not, the Canadian, even though I have a strong buy signal in gold, I have, but I will not be looking at the CAD to be my first choice in buying. So if I'm going to do my hierarchy of trades this week, the dollar, I will be first looking to buy the US dollar. I will also, the second thing I'll be looking at buying it would be the Aussie. I will also be looking at buying the yen. I'll be my first, the weakest currency this week is going to be the euro. And as I said, we're entering into a major bear market with regards to the euro. The second one I'll be looking at selling is the Canadian dollar, and we are very neutral as far as the Swiss, and we might also be slightly neutral. I'm slightly neutral to positive for the British pound, so I'm going to give it one plus for the British pound. So I might be looking at slightly buying the pound, but I would be buying first the dollar, then the Aussie, then the yen. If I wanted to trade the pound, I would be trading the pound against the euro. I'll be short the euro pound. I might be going long the CAD, the pound CAD. Um, I will be staying. I might be looking at the pound Swiss. It's not that weak, the Swiss. Okay, so just to wrap it up, we are going to be buying the US dollar. We'll be looking at buy and selling. So I'll buy the dollar euro, and I will be selling the euro dollar. I'll be looking at the Aussie as buying the Aussie versus the euro, buying the Aussie versus the CAD, buying the Aussie versus the Swiss. I'll be looking at buying the yen or selling the euro yen. I'll be looking at selling the CAD yen, and I might be neutral versus the pound yen. I might be taking the pound yen to the long side. Okay, so strong dollar, strong Aussie, strong yen, very weak euro. So we're looking at selling the euro across the board, and we are kind of neutral for the Swiss franc and the British pound. Okay. Anybody has any questions on this while I save the recording?